ADC stock is one of the bigger REITs that has increased a big amount lately. On the year-to-date chart, we see that Agree Realty is up 18%. And obviously, most people like ADC because of their monthly dividend, which is hovering at 4% dividend yield as of right now. And most people refer to ADC as the new or better Realty Income. So let's check their recent earnings, do a fundamental analysis, and finally come up with 3 price targets. On the 22nd of October, Agree Realty presented earnings where they missed on FFO, but beat on revenue, both with a very slim margin. Looking at the third quarter highlights, we see that net income per share increased 2.6% year over year to $0.42. The FFO and AFFO increased 2.2 and 2.8% year over year. And to be honest, these three numbers are not looking that exciting to me. The dividends see a similar growth at 2.4%, which is very nice, but again, not too exciting. The good part is that net debt to EBITDA is reported at 3.6 and 4.9 excluding unsettled forward equity. Both numbers looking pretty decent to me. For the full year of 2024, it is expected that AFFO per share will be in the range of $4.12 to $4.14, which is pretty decent and easily covers the dividend. But again, there's only minimal growth here year over year. Looking at the expiring leases, we see that only roughly 21% of the leases expires before 2029. And about 35% of the leases expires at 2033. So this looks pretty solid to me. Walmart is the biggest tenant with 6.3%, which is below my 10% maximum. Again, looking pretty good. We also see that the top 18 tenants make up for about 54%, which is looking pretty good as well. Looking at the sector breakdown, we see that grocery stores is the biggest segment, together with home improvement, both sitting a little above 9%, which is again lower than my 10% maximum. So to me, this looks good as well. Looking at the geo breakdown, we again see a great diversification, with taxes being the biggest with only 6.9%. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. ADC is a 7.6 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at almost 17.7, indicating that they are trading around their fair valuation. Later in this video I will show you my 3 price targets for ADC stocks, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 600 million, and in this graph we see that revenue went up in the long run. It has to be said that for a REIT it is growing really steady and consistent. Gross margins are decreasing over a longer period of time. Lucky for us, ever since 2020 the gross margins are increasing again. The profit margin is decreasing as well and couldn't find its way up. The EBITDA margin, on the other hand, is looking really good with a pretty decent increase over a longer period of time. EPS is looking flat over the years, and I would love to see some increases here, but for a REIT it doesn't look too bad. Analysts expect mid-single digit growth for the EPS in the coming years. It's not looking too exciting. For the revenue, it is looking very interesting, with 12% growth expectations in 2024. From there, they expect growth to slow down a little bit in 2025. And from 2026 on, it is expected to increase at much higher levels again. Return on assets is sitting at 2.4%, which is a low number for a REIT. Return on equity is also looking pretty low. And the most important number, return on invested capital, is sitting at 2%, which is a low number, even for a REIT. It is slightly higher than the 5-year average, so that's the positive part here. Current ratio is at 0.79, which is a decent number for a REIT. Nothing special to mention here. And right now, ADC has 2.7 billion in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. ADC has 14 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is growing really nice and steady over the years. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at almost 4.1%, which is a great number. Annual payout is a little over $3, and payout ratio is around 74%, which is around the 75% average for REITs. The 5-year growth rate is at 6%, which is a decent number. And they increased the dividends for 4 years in a row, which is really nice. And keep in mind, ADC pays a monthly dividend instead of a quarterly dividend. And here we see the dividends paid since 2014. And to me, this looks really good. ADC really likes to increase the dividends at a low rate, but over a longer period of time, this really adds up. In this graph, we see the expected dividends in 2024, 2025, and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at a historical rate from here. And overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare ADC stock with the overall market, in this case the S&P 500. Next to that I added Realty Income. On the 5-year chart we see that ADC returned 15%, and this is including dividends. The S&P 500 returned 108%, massively outperforming all stocks in this list. But Realty Income is looking really shocking with a minus 4% return. On the 1-year chart it looks pretty interesting. We can clearly see the momentum is with the REIT sector as well. But the S&P 500 still managed to beat both REITs. On the 6-month chart, it is ADC that is surprisingly beating both the S&P 500 and Realty Income, with a total 32% return, doubling the other two. On the 1-month chart, it is the S&P 500 again who is the winner here. So bottom line, the S&P 500 was by far the better investment in the past 5 years, and it seems that the momentum is a little gone with the REITs. So could this be the perfect time to buy ADC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. For the revenue growth I'm filling in 9, 11 and 13%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 28, 30 and 32. And for the free cash flow margin I'm putting in 70, 71 and 72. For the PE ratio I'm putting in 20 since it is a REIT, and for the price to free cash flow I'm putting in 12, 13 and 14. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now ADC stock is around $75. I hit analyze and we see a few green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $68. We have a mid price target of $83 and we have a high price target of $101. And to me, the mid price target is the most justified here, indicating that this stock is still undervalued. Please let me know the price target that you think is the most justified in the comments down below. My final conclusion on ADC is that I love the business. It is currently in my portfolio and with reason. The company is capable of growing really steady and consistent, and that's really impressive for a REIT, especially in times like this. Other fundamentals also look really good to me. The only big concern I have are the margins. I wish we would see some improvements here, since it is decreasing for a really long time now. So it's not only related to the recent events. From a dividend point of view, things look really good with a really high yield at a secure and safe level. On top of that, they pay a monthly dividend, which is also really interesting. From a value point of view, I think things still look pretty attractive. When the stock was trading a little under $60, I decided to buy some more shares. As of right now, I still think it is a good buy. But for now, I'm waiting for a small dip and then start buying again. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video.